Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. You can find him on Twitter at Due Diligence Guy. He's speaking to us from the beautiful island of Puerto Rico. Welcome back to the show, Lobo.
Thanks, Jim. Good to be back.
Lobo, your take on the markets. We've seen quite a bounce recovery over the last few days. Is this going to continue?
Well, that's a crystal ball question, Jim, and you know I don't like making predictions, but my technical friends say that as dramatic as the rebound, and we're talking broad markets here, the main indices on Wall Street, as dramatic and as large as the rebound has been, in order to really sort of be out of the woods here, my technical guys friends say, you need to look at not a 30 or 40% retracement or even a 50% retracement, but something more in the order of a 60 to 70% retracement. If, the Dow and the S&P 500 and so on can recover that much ground and continue powering higher up, well then I guess we can conclude that the big money bazookas are going to reinflate another bubble and that that the bottom behind us in March is the bottom for this round. We're not there yet. And me being more of a fundamentalist than a technical guy, I just look at the world. I just look at the damage. I just went shopping this afternoon with my wife to go get some things. One of us minding the car, and it was like the Soviet Union. All these empty windows and the closed shops, and the one shop that's open, you have to wait hours in a line just to get in to get some toilet paper. It's like an actual Soviet story relived. Okay, so yeah, we get it. It's all bad and it's terrible, and 22 million plus jobs have been lost in the last month, but it's all temporary, right? Oh, it's all because of the virus, and as soon as we lift the closures, then we go back to work and everything will be fine again. But that also is obviously not going to be the case. So at the very least, we know already that it's not a V. Like, if it was going to be a V, would have started already in terms of the real economy anyway. And the real economy does matter. So there's just so much more world of hurt out there that's already baked in the cake. I don't have to guess, or I don't have to have a crystal ball to know that there's a lot more economic pain on the way. We know it. We see it on Main Street. And it does get reported to Wall Street. Today, as you and I speak, the major indices are up despite this another, 5 million, 6 million jobs lost reported today. Yesterday, the markets were down because of greater than expected retail sale losses and manufacturing losses in the U.S. I found those numbers really interesting because we knew it was coming. Right? There was no way you couldn't know that retail sales were going to be down, like off the charts down. Everybody knew that. Mr. Market knew that. And yet the day before, Mr. Market was in his manic mode, buying things up. News came out, and suddenly he's in his depressive mode. Today, he's in his manic mode again. I just don't trust it. This constant vacillation between manic and depressive, that's not healthy. That's not a good thing. And so you combine that with, again, the technical guys saying it's too early to say the bottom is behind us, and the fundamentals that I pay so much attention to just being so full of bad news yet to be reported. And one more thing on that. The numbers that came out yesterday, they weren't just bad. Yes, we expected them to be bad, but they were way worse than consensus expectation. The manufacturing index, I don't remember the exact numbers. I don't have them in front of me, but it was something like they expected to be down 35. And it was down almost 80 It was down more than twice as much. It wasn't just the biggest decline on record. It was the biggest miss compared to economists' forecasts on record. So I see more of this coming, and I'm very skeptical that all the money printing can hold stocks up when the real world economy is hurting so much. At some point, reality should matter. Now, I could be wrong. You print enough money, all that money has to go somewhere, and we saw last time in 2008, it went to propping up stocks. So that may happen again. I'm just saying, for whatever it's worth, rather than performing the service of looking in the crystal ball and telling you what will be, my service today is that there's plenty of reason to be cautious. I would not be buying the mainstream stocks these days. Very, very risky. Could I be wrong? Could the bottom be behind it? Absolutely. But that doesn't make it safe to take that bet right now.
We'll have more with Lobo Tiggre right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, what's going on with uranium?
Well, that is a very interesting, I don't want to say silver lining. And maybe before answering that, I should say a corollary or spin-off to what I was just saying about the caution on the mainstream markets is that gold has been doing very well. I'm not the only one to see this. You've got actually some fairly mainstream talking heads on the financial media sounding the cautious notes, and the market just doesn't seem to listen. The market wants to go up, and it's really striking, because I'm not a lone voice in the wilderness saying, hey, there's a lot of trouble in the real world, and it doesn't make sense for stocks to be going up in the face of that trouble. A lot of people are saying this. So the fear is there, and the need for some kind of safe haven hedge is there, and that's obviously been very good for gold, which has held above 1,700 for a while. 1,700 is the new 1,600. 1,600 was the new 1,500. 1,500 was the new 1,400. I mean, objectively, gold is doing really, really well. Silver, which has its industrial uses, not so much, but just want to put that in there, that the safe haven story and the fear story is still driving gold, and the money printing is also, the dollar is also driving gold. I think we have a kind of a win-win scenario for gold, so I'm very bullish on gold going forward. So that you would expect, but why the heck would uranium, which has just gone through the roof, it has gone up about 25% over the last couple of weeks. It rose above $32 a pound for the first time in about 4 years just yesterday. This is a big deal in the uranium space. We haven't seen prices like that, like I just said, for years, but the upward trajectory actually fulfills a trend and a longer multi-year trend where we've seen a series of higher highs and higher lows since 2016. So we're now in one of these upward surges for a new higher high in this continuing trend, and that's really longer term really important. It cements that trend in place for yet another round, and that's very bullish going forward. But as for why is it happening now, if you think about it, in a way, it kind of makes no sense. You've got this huge economic stoppage all around the world, a global shutdown. You've got the price of oil really going in the tank, sub $20 at one point, because airlines aren't flying, ships aren't sailing, cars aren't driving. The demand for energy is really decreased. So why would an energy commodity like uranium go up? And this is something I think I've talked about before with you on this show, Jim. in that I never claimed that anything could be entirely recession-proof. But I did say that uranium could be more resistant to recessionary pressures than almost any other mineral, non-precious metal, copper or other minerals, industrial metals and minerals, because uranium is used for nuclear power plants, which are used for baseload power. The thing about nuclear power is that, love it, hate it, is that it's stable. It's always on. It doesn't depend on the sun or the wind or even the levels of water in a reservoir. Or any other kind of random factor that's outside of human control. Your nuclear power plant, assuming you build it right and not in the path of a tsunami, it's always there, it's always on, and therefore it's used for keeping the lights on in your home at night and for, essential things like hospitals. It's the stuff that you have as sort of your bedrock. And on top of that, you'll have spinning reserves and other sources of energy that can be brought onto the grid to power surges in needs or industrial demands in specific areas. So again, I'm not saying that uranium is recession-proof, but because of how it's used and what it's used for, even in a recession, people want to go home and turn on the lights and be able to cook their dinner at night. So it's much more resistant to other forms of energy. People may not be driving or flying much, but they're still cooking their dinner at night. And that's been very good for uranium. Now, that doesn't mean that the price should go up, but I'm just saying, keep that in mind, is that uranium is different from other industrial minerals and energy minerals. So on top of that, you had a situation where the price was already below cost of production. The global average cost of production is around $40 a pound. And uranium was hit by excess supplies coming on the market from Japan after they shut down their reactors. And the price went way below the cost of production, all the way down to $18. And that's been recovering, as I said, since 2016 from that low. And so, but it's still too low. It was, 20 odd bucks, low 20s just a month ago. And that is so low that the miners couldn't make any business. People were shutting down mines. Big high-grade mines were being shut down. Even the lowest-cost producers in the world, Kazatomprom in Kazakhstan, they cut back their production, just like OPEC, voluntary production cuts because the price was so low. And in this context comes the coronavirus. And suddenly, mines get shut down left and right. Whether or not it was safe to operate these mines, if you have a provincial government or a national government shutting down non-essential businesses, these mines get shut down. So we had that happen to the major high-grade producers in Canada, owned by Cameco. And we had Kazatomprom, the lowest-cost producer in the world, which had already cut its production voluntarily due to low prices, say, well, now we have this COVID thing, and we're expecting our output to be 16% less this year. And that's their initial estimate. Who knows what it'll actually be. And the other thing about this, I know I've talked a lot and I need to give you a moment, but the other thing about this is that you shut these mines down, whether due to low prices or whether it's the COVID-19 thing. You don't usually just flip a switch and turn a mine on again. Not usually. You don't just flip a switch and turn a mine on again. You put it on care and maintenance, and there's a whole ramp-up procedure that's necessary to bring a mine back in line. And by the way, if prices are still too low to make money, you may not bring the mine back online after COVID-19 passes. And in fact, we've seen that already with Cameco, the big Canadian uranium producer, shutting down first McArthur River, their number 2 mine, a couple months ago, or actually last year, and now shutting down their flagship, top number 1 mine, Cigar Lake, one of the biggest, highest grade mines in the world, or the big high grade mine. It alone accounts for a giant chunk of global uranium production. And they shut that down for COVID-19, and in doing so said, well, we'll look at the situation after COVID-19 passes. And now, a couple of weeks later, they're saying, well, it's going to remain shut indefinitely. We'll just have to see. And basically what that tells me is, they've already put it on care and maintenance. Why spool that puppy back up into full production if they can't make money at these prices? They could still buy uranium on the open market cheap and sell it into their long-term contracts at higher prices. So it makes sense for them to preserve the pounds in the ground that they have to a day when prices will be higher, which pretty much everybody who knows anything about this space believes is coming. So we have a really interesting circumstance where you already had depressed prices for the reasons we've discussed. And then on top of that, the COVID thing just kind of pushed a bunch of dominoes over the edge. And the price is going vertical as you and I speak. It's just leaping like $1 a day or 50 cents a day, which from a low base is a big deal. It's quite interesting to see this happening right now.
We'll have more with Lobo Tiggre right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, there was that plan a few months ago that President Trump said he wanted to buy Greenland because of the rare earths there. How rare are rare earths? And does anybody know that Canada might perhaps be the number one source for rare earths, but we don't have any rare earth mines?
Well, maybe Canada needs to do a better job marketing itself. But then again, maybe you don't. You might find some hungry neighbor try to buy your country. But joking aside, you're putting your finger on something really important. The rare earth, when they were discovered and very difficult to extract from other from the minerals in which they occur, they seem very rare. But you know what? A lot of things seem rare initially. I remember aluminum, when it was discovered, was so rare and hard to extract. It's very chemically active, so it's hard to get aluminum atoms to let go of whatever they're bonded to. It was very expensive and difficult to extract aluminum. And it was such a rare metal that they used it to cap the Washington Monument in Washington, D.C. It was like an honor to put this aluminum cap on top of the spike of the obelisk there, because it was such a rare metal at the time. And, you know, obviously we now know that aluminum is not a rare metal. Same thing for rare earths. They're not at all rare. The economic concentrations of them are not so easy to come by. And even more important, minerals from which you can extract the rare earth easily are much more difficult to come by. So this is really important because there's a lot of nonsense going around in the media about, do we need to buy Greenland, or we have to, stick it to these evil Chinese who control and monopolize the rare earth market in the world. And it's just simply not true. It's an incorrect understanding of the market and these metals. China does not monopolize rare earths. They don't have all the rare earths in China. It's not like God decided to put all the rare earths in China and give them that wonderful benefit. It's not like that at all. As you pointed out, there's major rare earth deposits in multiple locations across Canada. The U.S. has them as well. They're not rare, but they're difficult to process. They're expensive. In China, if you have the advantage of dirt cheap labor, very low environmental standards, where you can throw all the acids you want at these ores to get the metals out, and not care too much about the environmental consequences of some really, let's just say intensive processing that they do there in Inner Mongolia. Baotou is the area where these mines are in Inner Mongolia, northern China. And it kind of looks like it's a slag heap of a wasteland when you go by there. I've been there. It's kind of scary. So that's why China produces 90% of the rare earths in the world. It's not because they don't exist anywhere else. It's not that, there's some law of nature that makes it that way. It's just simple economics. The Chinese are willing to produce them cheap enough. It is by producing them cheap that they have cornered the market. And that's it. So we don't need laws to make rare earths available elsewhere. If governments want to subsidize rare earths production somewhere else to diversify and to not depend on China, fine. But understand that that's what you're doing. You're simply subsidizing less economic production elsewhere for other non-economic purposes, military or whatever. that's fine. If a society wants to do that, if people decide that that's important enough to spend resources doing, whatever, you vote for it, then there you go, you've got it. But it's simply incorrect to blame China for withholding these important rare earths from anybody else. That's just not the nature of the beast.
Lobo, how would you sum up what's happening right now, and how should people power their way through it?
Well, going back to what I said earlier, I think the only certainty is uncertainty right now. I think there are a lot of talking heads on financial media that they're very good at grabbing a headline. They make these bold predictions. This is what's going to happen. The dollar is going to lose value and crash because of this, or the dollar is going to be super strong because of this, or this is what's going to happen. You have to buy this. You have to do this, and so on. And then when you do this, months later, that guy's long gone, and the consequences for you, the listener out there, are yours to bear, not his or hers. And this really disturbs me. This is part of why I don't participate in what I call the prediction racket. But I'm not just being wishy-washy here. That doesn't mean we have nothing to say. That doesn't mean we can offer no guidance. And I think it is significant to say that what we are facing is a great deal of uncertainty. We know what to do with uncertainty. You look for safe haven assets. So this makes me very, very bullish on gold and eventually silver, almost regardless of what happens next. And even though history never repeats, like Mark Twain says, sometimes it rhymes pretty well. What's going on now is very different from 2008 in many ways, but it's still a big crisis. It's still meeting a government response of a huge flood of liquidity, easy money, and that is very good for competitors to those fiat currencies, including gold and silver. So I think that even though I don't know what will happen, everything that I do see happening tells me that it is a very prudent move to beef up one's monetary metals, gold and silver holdings, particularly gold, more speculative upside in silver. And that's a beautiful thing, because under these circumstances, it is both prudent and it offers you speculative upside. And of course, if you really want to make money, not just preserve your wealth, then you can speculate on the related equities. And the more junior the stock, the more potential alpha there is there of wealth creation, but of course risk too. So buyer beware. I can help with that if anybody wants to stop by independentspeculator.com. I have services in that regard. But those would be the most important things to say. And then on top of that, this sideshow with uranium, let me say one more thing. It is going vertical right now. There are stocks that are moving sometimes double digits on a daily basis right now. So this is something that it would have been better if you had got in when nobody cared or wanted to hear about uranium. Now that it's happening, I do think there's money to be made in this space. But if this COVID thing blows over faster than is feared, and if Cameco were to start up again, and if the Kazakis were to say, okay, we're back in business and we're going to catch up on production, the rally could fade. The longer term trend, I think, is upward, and people who can handle extremely high volatility, I think, will do well. But remember, I'm talking about a series of higher highs and higher lows, and now we're in one of these bumps where we're headed for higher highs. That doesn't mean there won't be another drop down to a higher low in this overall trend. So all I'm saying there is it's very interesting. I have information about uranium also on my website for anybody who's interested. But just beware that it is in sort of its upward momentum phase right now, and that could fade, or it just could go ballistic. And I honestly, again, don't know which it will be.
Lobo, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Lobo Tiggre from the independentspeculator.com. You can find him on Twitter at Due Diligence Guy. If you have any questions for Lobo or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.